Welcome to Caching Waves. This is an Elliott Wave update for Flare. Now before I get into this, I just want to make it very obvious to you that these are very complex overlapping patterns, a lot of WXYs, a lot of multiple combination patterns. I've mentioned that many times in many videos that when we get to these very complex structures, I more rely on fib levels and pitchforks rather than exact wave labeling. We know where our target should be for WXYs. We know where we're expected if we're getting diagonals. That's what I'm relying on with Flare specifically. Now, one thing of note is we do want to continue to make higher highs and higher lows. So we don't want to see any areas that was previously resistance used as support broken. So we don't want to fall below the 618 retracement of this third wave, which is at 2.551 cents. We don't want to fall below with any significance. We can have a quick spike candle through and a fast rejection like you saw on this Y wave, something like that. But anything with significance where we close below and continue, that's pretty much it for this diagonal count. And again, if you haven't seen Manta, similar idea. If we don't break above into price discovery, we expect to make three-wave patterns for a very, very long time. And if we happen to do that and break below those levels, I would just set my alarms at the lows and the highs and forget about tracking this one for a while. Now, let's get to the count. Now, hopefully we hold here. Again, very complex structures. Wave 1. Had our wave 2, came between the 236 and the 382 on log, linear, just shy of the 50. Very bullish correction as a WXY. And then we had a double zigzag here for our third. And again, very complex WXY for our fourth. Importantly, we've came between the 50 and the 618 of this third wave as our retracement. And we tagged just between the 618 and the 121 extension of this W off the X for our Y. So right at the area, you can see we were at the bottom of our pitchfork. It is respecting it currently. So I'd like to see this just continue on up to 7.736 cents as our target for our fifth wave guideline. Now, as we get up there, say we get up here in a very complex manner, just like this. We're not looking for fives, we're looking for zigzags, three-wave patterns, WXYs. So we're not going to know if we're impulsing as we move up here. It's going to be ugly. Again, it's a diagonal, so we're not expecting clean fives. But once we get up to this price discovery area, there is a chance we get a very shy retracement above that level and just take off for our third of the third. I know a couple people have asked me for targets for that. I can't give that to you. If I just pull from our guideline target to guideline target, we don't know where we're going to correct to. Are we going to come back to the fourth? Or are we going to correct above? Because that all decides where these eventual targets will be. Just know they will be high. I can't give you even a range just because we're most likely going to be dealing on log scale, and the slightest movement adjusts things very significantly. So the important thing to note here is we're looking for this fifth waves. We know we're not looking for impulses. We're looking for complex structures. So what I'm looking for, again, because these are complex structures, is I'm just looking for important break levels. The 618 of this last Y wave, right there at 3.71 cents. If we break and close above with significance, chances are we're more likely to be moving to the upside than back to a new low. Simple as that. We just flips probabilities because usually we'd expect continuation if this isn't open at around the 618. Now the issue with that is we have to also pull from the second 618, right? We also have a second 618 up there at 437. So we're not going to be out of the woods till we basically break this high. And that's the thing with trading. We don't have any certainty here. We're just working on the fact that we came to a 50 and a 618. We were at the minimum requirement for this to be a Y wave. We're also respecting the trend line. Everything's looking good. slight divergence, but you're not really going to get divergences in Y waves. You get them most likely when you have a 5-wave pattern, which we don't have. We have complex structures, right? So that's where the difficulty comes in. So in this fact, all I would do is simplify things. I would say I'm expecting complex patterns. So just looking at this count, you can see we have potentially a triangle. So this could be something like an ABC to the upside, right? Then we grind sideways, and then we can get another ABC to make a W wave. Then we can get sideways, we can make another ABC. See what I mean? Like, it's not going to be pretty. And you have to accept that going in and trust where your stop is. Because it's similar to this. Look at all this ugliness, right? It's going to be similar. So my plan is to take an entry, stop at the low. If we break this low, take another entry. Very simple. I might wait for the break, wait for sideways, stop at the low, but it's literally a 2-entry trade for me. So you can get in here, stop at the low, or wait for that 1-to-1, which might never come, and let it run. So I will track this as I go, but you understand it's going to be very difficult, ugly patterns moving to the upside. Important thing is we can raise our stops past significant areas as we go. Just keep raising them. Most likely a 618 unless we get a invalidation point on a count. We can raise them to, but eventual targets on the long side is 7.736 cents. And when we get up there, I might just add. I might just raise my stop and add, because we're expecting a 3rd wave after the fact. So we'll see what we get here, but expecting ugliness. Do not try and track out an impulse here, because you're not going to get it. You're just going to get a series of ABCs. So that's my plan. Right now, that setup at current price is about 6.5 to 1. If we happen to drop one more, let's say we come up, reject off the 618, make one more move to the downside, come up, get another entry, hit that 1-to-1, it would be something like that. So I'd take both trades. Not financial advice, just what I would do. I go for position size more than anything, eh? But one more thing to look at, but I don't rely on these. As you can see, we've broken this trend to the upside, this trend line, I have in gray. So that's a positive sign to the upside. But even if you look previously, when we break trend lines, it doesn't mean we're breaking out. You can see we broke the trend line here and then reverse for another one, then broke above, then consolidated above the trend line. It doesn't mean we're just going to go. We could come up, break above, break below, break above, trend similar to this, right? So don't take that as we're breaking out. That's not the fact, but there's 2 good trade setups there that I'm going to take. Not financial advice, just what I'm going to do. But we're right in our zone at between the 618 and the 1-to-1 in time of this wave 2. So right in the zone where we would expect a pivot. I don't see any reason for me not to take that trade. All right, guys, that's it for this one. Thanks for watching. I'll see you on the next one.